Welcome back to Old Guy REI. We're continuing the video series that we started a few weeks ago, introducing some of our investor friends to the rest of the community. Maybe there are some areas out there where
That
they're not really well known, but a lot of our friends are doing some really great things. So tonight, Cody's agreed to give me some of his time, and I appreciate it, Cody. Um, like I said, we're in a few of the same groups, basically, and we get to hear your story, and we've learned a lot from you. But for folks that are just getting introduced to you, could you tell us where you're at and where you invest?
Yeah, of course. Thanks for having me on, Frank. I do appreciate that. Um, yeah, I have been investing for about 5 years, a little under 5 years, probably four and a half. But I invest in the Wisconsin market. Got properties in central and northeast Wisconsin. So most of my stuff, I'm at 18 units right now. So I have a couple that were house hacks, and then a lot of my other stuff are uh, I have what seven duplexes or eight duplexes, and then a condo, half of a duplex, and then a single family house right now.
And you said you started about 5 years ago. What popped into your mind, and why is real estate something that you're interested in doing? Is it something that you're hoping will help you get retired sooner?
Yeah, exactly that reason. So I know a lot of people have kind of said like keep money putting in your IRA, 401k, like that kind of stuff. And I actually work for a financial services company, so I definitely agree. Like if you're looking to retire after 59 and a half, that's a great way to do it. But if you want to retire before then, it kind of makes it hard when everything's kind of geared for retirement age. So that's kind of been in my mind for probably 10 years now. And I was always like thinking about, okay, how am I going to, figure out a path to do it earlier? And my thought process was to get into real estate. And then I started, I think I found Bigger Pockets first and just started listening to them kind of on repeat. And then eventually found One Rental at a Time and Dion, and have listened to them since then. But that's kind of been my progression is kind of learning over the last probably 10 years. I don't know if it's quite that long, maybe 8 years for sure. And just education and all that stuff. And then I bought my first place. Was a house hack duplex. Bought that 5 years ago, in 20 September of 2020.
Great. You mentioned Dion. I know we're both in his course. Have you taken any other mentorships, and how do you have mentorships helped you, do you think?
Yeah, I took the One Rental at a Time course as well. So I did it. I took that one first, I think, about 3 years ago, and then I took Dion's right after that. I really like Dion's because like you're able to interact with him. He does like a weekly or monthly call, and we were able to meet our group of friends from there and start our weekly call, which has been awesome. And just being able to bounce ideas off each other, kind of going through with Mikey, Jason, that whole crew, and so just having that communication of like, here's what's going on, um, how do we work through this problem? That's been huge to be able to talk through that with you guys.
Yeah, I was telling Dion today that I understand it's not going to be easy, and you're familiar with what we've been going through with our St. Louis stuff, but
Oh yeah.
um, we know it's not going to be easy, and I'm not giving up, but it is nice to, like you said, bounce ideas off or just say, hey, this is what I'm going through this week. We talk every week, and
Hmm.
that's been helpful to help, keep us going in the right direction. So everybody, and something Dion said too, is that when we were talking about one of our specific properties on a call, and nobody in the group had like a negative thing to say, right? Everybody was just shooting out suggestions on what might help. And
Yep,
that's a big difference between this community and maybe family members or regular friends out there,
for
because I
sure.
think a lot of them would have said, that's why I don't invest because of what you're going through. So,
Exactly.
yeah. And at the same time, maybe it's a good thing that it's not easy because then everybody would be doing it and it'd be a little bit harder to find deals and things like that.
Yeah, I totally agree there, and I know you guys are kind of going through your rough patch. Hopefully, hopefully you're, on the other side here shortly. I had, I had my grind phase, about a year and a half ago, I think it was, and I think over half our portfolio was vacant at some point, and within 6 months of each other. So like, when you're constantly turning over units and trying to fill units and taking a couple months to fill units, like that just wears on you over time. I know it's something like in the first couple years I was really, fine with everything. If there's an expense, like I was okay with it. But that part where it's just one after another after another after another, it was like starting to wear on you. And that's where our group, really helped. And I think you probably agree with me where like you can get through that and figuring out a way to get through it, because as long as you're still in the game, you don't lose, right? Like, um, whatever you need to do to make sure you can keep moving forward, even if it's you limp along for a year, like once you get through that, the hard phase, then it just makes you stronger on the other side.
Yeah. It before, and we've learned so much and I'm sure you have too, but I mean, in the beginning, you think, you pick up a property and place a tenant and everything is good after that. But then you start talking to our mentors, Dion and Matt and those guys talking about stabilization and optimization. And all of a sudden it's like, what is that? What is that stuff?
Yeah.
So we have been learning a lot. Um, you have a beautiful family. I know we've become friends. We were lucky to be able to meet you in Vegas last year. Not We didn't get to go this year, but
Yep.
how is your wife? Is she on board? Does she understand what you're trying to do?
Um, she definitely understands what we're trying to do. She's on board with everything. I think she's not as involved. Like she's a stay-at-home mom, so she is 100% like the caregiver at home, and she's amazing at what she does, and so I'm so thankful for her. But she hasn't really been part of the real estate side of it. She just wants me to kind of handle it and go from there, and that's totally fine. So, but she's amazing and handles the kids and make sure their appointments are done and all that kind of stuff. So it really makes my life easy on the other side.
Yeah, that makes me think about a couple of weeks ago there was a group on Mark's channel, a group of lady investors, and they were talking about how, well, one of them was talking about how she didn't feel like she was contributing
Hmm.
and she kind of thought it was all her husband's thing, right? But she wants to be involved, but just didn't know how to be involved.
Yeah.
Um, I always refer to those ladies because they're a lot, and we have a couple in our immediate group as well that are super knowledgeable, and
Yes.
we can learn a lot from them. Um, One thing that you made me think about that I think we'll be talking about on our next Wednesday call would be I think about like if something happened to me, I want Cynthia to know like who to call, who are the PMs, who's the insurance, who's the mortgage with, and that
Yeah.
kind of thing. So she's going to be retiring this year, and your wife was a teacher too, right? Or she?
Yeah.
Yeah,
Yep.
yeah,
She was a teacher. Yeah, until we had our second kid,
mhm. Yeah.
and
Cynthia's
then it
teaching.
didn't make sense to go to work anymore. So she stayed at home after that.
Yeah, it's nice that you guys have that option. I know childcare is super expensive.
Yeah.
Um, so so yeah, we were gonna try to figure out and get all the information in one place, so that
Mhm.
um, she would know what to do. And I always tell her too about you guys that if anything happened, she knows she can call you, she can call Dion, she can
Oh
call
yeah.
any somebody in our group that could help. Hopefully nothing happens, but we we also talked in that meeting about the fact that we're none of us is guaranteed tomorrow, right?
Exactly.
We gotta, and that came around because someone asked about enjoying the journey, and sometimes it's kind of hard, but Coach Carson does it well, reaching a plateau and taking some time away to re-energize and things like that. So, but at the same time, we were talking about how, if you have just say $2,000 or $3,000 that you can go take a trip after you've reached a milestone, sometimes it's hard to let that $2,000 or $3,000 go because it can help you get the next deal. I know in the beginning you were really um, going for it, go 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 all the time, but it seems like lately you've stepped back a little bit to kind of analyze your whole situation, and you've talked a little bit about maybe picking some of the properties that they're still performing, but they're not performing as high as you had hoped. Um, and I think we could reach that same kind of spot in the near future just because we were buying pretty quickly. And,
Mhm.
and now you see some that aren't what you thought they were. Um,
Yeah.
so have you had thoughts about reorganizing your portfolio?
Yeah, I think after you don't know how that property is going to perform until you have it, and you don't know exactly how things are going to go in the market that you're in until you're in it, right? So, um, one of the markets that we're in, I am definitely looking at potentially selling. I got three properties kind of in the same market, and I'm looking at potentially selling those, whether it's moving those funds to something else or different goals that we have. So that's something I've considered as well that don't quite perform the way I want them to, and then they're kind of in a market that doesn't quite have the growth potential that I'm looking for. So we might reallocate those funds and potentially sell them. You know, uh, this year potentially, and see if we can kind of reorganize what we want to do going forward. And then, like you said, you know, taking time to kind of realize, like, take the time to really enjoy life in the process. And so, like, this year we went to Disney with the kids for the first time, even though our kids are pretty young. Like, it was worth it to us have that experience. Recently we went to Lake Tahoe with my wife and I. So we're trying to take some of those micro breaks in the middle to appreciate what we've done, and then hopefully it'll make the journey as we go easier. Not saving every single dollar because you don't, like you said, you're not guaranteed tomorrow. So we're trying to really think about that, and potentially go on more vacations coming up, and all that kind of stuff. So the stuff we're thinking about.
Yeah, I know in some of our conversations, the ones that you mentioned, the properties that you mentioned, were a little bit further from the majority of what you have, and that was not quite as convenient. When what is your W-2? What do you do for work?
I'm a compliance officer for a financial services company. So I work from home, kind of in the back office. It's been a really good job. Don't really have too many complaints, but um, yeah, I think it helps supports the greater picture of what we're doing. So hopefully we can continue that.
Okay, good. Um, you also, we talked about we were talking about financing before we got started recording, and it seemed to me like a lot of your properties you acquired through some kind of seller financing or creative financing. But you did mention that you have some conventional loans on the house hacks that you did,
Mhm.
and that's one thing that has helped us a lot. Just because you have some experience with that, I think you did a version of the 50/40/10 with one of
Yeah.
your local banks.
Yep. Yeah. So we've kind of done a little bit of everything. So we have a couple duplexes that we bought with straight seller financing. So we did a 90% loan to value and then a 10% down. So they carried 90% on four duplexes, and then so the same seller all had four of those, and then a different seller had three properties, and so that was the one where we did 50 40 10. And so for your listeners, like 50% helped cover their mortgage, um, and so we had 50% from our bank, and then the 40% they took as a second, and then we were able to put only 10% down on both. So we were able to get 10 properties, or excuse me, 7 properties for only 10% down, which is huge. When you're looking at, 10% versus 20%, it makes a big difference. And the big thing, to keep in mind is to make sure that, the balloons are out far enough if you have a balloon on a property. So we had 5-year balloon on 3, and then 10-year balloon on the other 4. And so just to make sure, like if you need to refinance in the future or something like that, that's something that you got to look into to make sure that your property is able to do that down the road. So just things to keep in mind.
Yeah, you mentioned in one of our meetings that you did have a 5-year balloon on one of your properties. You still had quite a bit of time on it, but you realized that the rates had come down a bit at your local bank, I think, and you were able to refinance out of that into something new, which was great, which leads me to the point of all the financial literacy that we've gained, Cynthia and I have gained through this whole process. And there's so many things that go on that we wouldn't have had any idea we could do. I know that we were struggling to get a refinance done on one of our properties, but
Yep.
in the past, that wasn't even a thought of something that we could do. And it was a little bit of a challenge because not a lot of the banks, that was one in St. Louis, all of the credit unions that I called didn't do refinances or HELOCs on, excuse me, it was HELOCs on an investment property. That was my first goal, but we ended up having to do a refinance instead. But we were able to do it. And I've shared with you guys before that our income is not super great. And I think, that was part of the challenge, even though we don't have a lot of outstanding credit. We just have our mortgage payment, which is our biggest bill. But some of the guys were saying that um, you need to get the money while you can, because when you don't need it, it's available, and when you do need it, it's going to be hard. So I try to tell folks just to plan ahead of time, and even if they're not thinking, like now we're thinking we might, while we have all of our paperwork into this same loan company, we're going to try to do a HELOC on our primary, even though Cynthia wouldn't really want to use money against our primary, but you never know if there's an emergency or something, and at least we have it. So it sounds like, I mean, we've been in the game about the same time length of time as you have, and and just all the different experience that you've had versus what we've had. All of our stuff is basically conventional, saving up for the down payments and things. But
Mhm.
um, I think as we go on, we'll be picking up some more tricks and tips along the way.
Yeah, I think that's line of credit is something that is really nice to have. And I just took out a personal line of credit just to um, use it if I need it. If you just need to move funds between banks or whatever. So it's nice to have. And so I've used personal line of credit for like that same reason. And the goal is, obviously to never use it, but when you're in a pinch, it's nice to be able to have access to something really short term. And same thing if you had a HELOC. So I do like those, like you said, just open in case you need it. Goals obviously never never to need it, but if you do, it's nice to have access to one.
Yeah, and I don't recall. I know we've had discussions about, um, well, we were just talking about optimization, right? And one of the things that we've done on a couple of our properties was get cash value insurance policies. And I was wondering on yours, are all of yours full replacement coverage policies?
Yeah, I believe so. I think everything that I have is a full replacement policy. Then I think we have a decent sized deductible on there. I think we kind of analyzed it, and I didn't take the highest deductible one, but I took like probably the second highest I could go. Um, just kind of playing the numbers. I just weighed the odds of things happening and decided to not do the highest deductible. So I just tried to figure out what was best there, but definitely a lot higher than most people would have. So that way, like, the only time you're really going to use it is if you have a fire or something major going on. Hopefully that's something that you never have to worry about. But that's what our thoughts are on it.
Yeah, that and it makes quite a big difference on the annual cost of the insurance. I know we had a couple, like I said, that were cash value, and it saved a little bit of money on the front end, probably $50 a month or something. But when the tornadoes went through St. Louis, I had second thoughts, and
Mm-hmm.
and just crazy thoughts like I wonder if you can have a full replacement coverage for the 4 bad months of the year and then switch back to a cash value. Just finding ways to increase the cash flow. But um, and I think I mentioned too that the cash value policy on one of them was like under $600, and then when we refinanced, they forced us to get a full replacement policy, and it went up to 1,300. So
Mm-hmm.
quite a difference. It takes a chunk out of the cash flow each month, but we couldn't have done the refi without it. And they waited till like the day before we were supposed to sign to pop that on us. Um, that's one of the things also that we've learned along the way is, you know, your deal's not done until you've signed.
Oh yeah.
They can ask for anything beforehand, within hours of signing. So we always try to have people get to the point where they're basically fully underwritten. There's steps. You get pre-approved, then you get pre-qualified, and then everything goes to the underwriter, and then they just pick it apart. Um, we we had a good experience with our last lender at Guild Mortgage, and he prepped us pretty well. So when it got to underwriting, that insurance was the only thing that popped up at the last minute. I think it's good to be able to express that to your lender that you want to get as close to being pre-underwritten as possible.
Mm-hmm.
When you, I think you've mentioned that you might consider doing one more house hack. Is that still in the plans?
Oh yeah. I think it's always in my plans. We'll see what my wife thinks, but yeah, I would like to do at least one more. We're in a duplex right now. This is the fourth duplex in 5 years, so we moved quite a bit over the last 5 years. But now we've started to have young kids, and it makes things a little bit more challenging. So we're like, all right, maybe it's not as easy to uproot every single year. So, but that's how we got started as a house hack, and we'd like to continue doing it because I think it just makes such a huge difference when you can lower your biggest payment. So not having a mortgage payment just makes so much difference, and so I'm gonna have a hard time ever buying a house for that reason. Um, but yeah, I would keep house hacking as long as I can, unless we're to the point where we're able to easily, afford a house.
Yeah, I think that, like you said, it gets a little more challenging when the kids get up to school age and stuff, unless you can keep buying in the same neighborhood, which might be a little difficult.
Yeah, yeah, definitely. And so that's stuff we're thinking about now. Is like, okay, where do we want to be long term, and what duplex would make sense for that. So we don't do rent by the room or anything like that. We just do one side of a duplex. So it's you're essentially living in a house. You just share a wall, and so we have great neighbors and tenants next door. So it's really not that big a deal. So anyone who thinks they can't house stack with a family, you can. It's really not too bad. It's like same size as a house. We have 3 bed, 2 bath, 2 car garage, driveway, everything that you'd need, from a house. So that's something to consider if you do have a family.
Yeah, and I think Dion has mentioned too that it's nice because you can basically choose your neighbors, right? You're the one screening and meeting and that
Mm-hmm.
kind of thing. And if they don't work out, you can get them out. But um, there were you made it to the Vegas event this year, and I know Matt and his wife did the house hacking thing until they finally got their nice primary, and then PTO for Life was the opening couple for the second day, and they're still house hacking, right? But they were doing more, like you said, of renting by the room and things like that. But it goes to show you that, you know, if you're willing to have maybe a little bit of inconvenience in the beginning, at least it'll get you further along than, you know, buying the way we are, buying a property and
Yeah,
stabilizing and things like
yeah,
that.
and to go back in time a little bit, actually 10 years ago, I bought you know, my first house, and so we lived there for 3 years or so, and decided that in order to change our lives forever, that we needed to house hack, and so we ended up selling our nice house and buying our first duplex to live in one side. So it was a major transition that we decided to do and kind of take a step back to move forward, and it was a great decision. Now looking back, obviously a lot of a lot of work to get to this point, but it was worth it in the end. And so yeah, we ended up selling our nice starter house that we did have, in order to go kind of backwards into duplex, but it was worth it.
Yeah, I think following your journey, um, I think in your market you've been fortunate because, as you've mentioned in the past, appreciation worked out really well for you in your market and helped you make some good moves. And
Mhm.
we talked too about Cynthia and I being older, like closer to retirement, and not really being able to bank too much on appreciation. You know, we're going for cash flow basically, because that will supplement whatever income Social Security is going to give us. And I got started because I didn't have a retirement account myself. Being self-employed all these years, I was just working and you know being dumb, I guess. But um, then I got, when I hit my 40s and I realized, late 40s, I realized that might be an issue. And a lot of people, like I thought, Social Security was going to take care of us, right? And once you start looking into it and realizing it wasn't meant to take care of you, really, it's meant to
Mhm.
supplement. Maybe you have a good retirement account that you've been putting into all the years, or contributing to one that your company has set up and things like that. Maybe if you had both of those in conjunction, it might be okay. But I got really scared. I had to, and like you mentioned, I was searching around and found bigger pockets, thank God. And then from there, we were able to start building a small portfolio. And obviously, like I've said before, we won't really be able to retire early, but at least we'll be able to retire, you know, with something better, a better life than we would have had if we hadn't gotten started.
Yeah, totally agree. The fact that realized in the moment, like, hey, it's time to make a change. And I think real estate's something where you can do in that decade, where if you're investing in your 401k and IRA, that it does, if you had a high income, maybe take 15 to 20 years, but at a median income, it's going to take 30 years with compounding to really get you to where you need to be. And that's just something that I kept looking at, and like, all right, real estate, you can do it in 10 years. And like, I, I like having that option, of that flexibility when the time comes. And yeah, if you can get through the hard times like we talked about and make it 10 years, then you finally have, you know, your mortgages start getting paid down, rent start increasing, all those kind of things start happening where eventually it can start working in your favor long term. But the first 5 years, you don't see that, so you just get stuck with fixing a water heater or fridge or furnace, and all your cash flow is gone. But you got to look at the long term. Like if you wait a decade, will it be better? Absolutely, our financial future will be better in a decade. So we got to keep surviving in advance through the the troubles that happened in the first 5 years.
Yeah, that's been a big topic, between Michael Zuber and the guys, Dion and Matt. But Dion had brought up a point, and again, I talked about how much we've learned over the years, but he, in your house hacking, but he also mentioned house hacking can get you started, but house hacking could also be a way to help you retire because, if we bought, say, a duplex or a quad and lived in one unit,
Mm-hmm.
the other 3 units or whatever is going to help pay our monthly expenses. So we've seriously considered that. And, we've been talking about selling our place here and moving, taking our equity and you know, putting it all down on something so that we don't have a high mortgage payment. So we've gained some hope over the years. It's been really promising, I guess.
Yeah, you guys could change a lot of things if you use the equity that you have in where you're from and brought that to a lower cost of living market and paid for cash and then had someone on the other side paying paying you, so you're living then better than free. You're probably making 1,000 or 1,500 a month. If you're able to use that equity to pay off your place that you would live in. So that can be huge in retirement. The extra $1,000 versus 2 or 3,000 going out, that makes a big difference.
Yeah, that's exactly what it is here. It's 3,000 a month here. So um, we're looking forward to the future for sure.
Awesome.
When we talked about mentorships, and I know we're in a lot of the same groups. Is there anyone between Zuber? We got to talk to Millennial Mike today on the course call. The lumberjack and Dion. They all have a little bit different type of investing that they do. Is there any one of them that you lean towards that you learn more from than others?
Yeah, I think for me, I probably lean towards Dion the most because he's such a relatable person that, and he's doing stuff that is like very achievable and repeatable and easy for the average person to do. Nothing he does is hard per se, like or complex. So like it's super relatable, and that he doesn't have a huge portfolio. Having all this other things going on. So that was the big one for me. And I'll watch every single video that he puts out because I think he was able to do it with the same amount of units that I have at this point. He just had the time on his side. So he's able to get that much bigger margins that I'm just not in it long enough to achieve yet. So I really like watching his stuff, and he's just someone that you can relate to, and I think that's important. So I always enjoy listening to what he's talking about, and he always puts a different Dionism in there to to make you think. So he's probably the one I relate to the most.
Yeah, he's really good at that. I think we probably sometimes we have trouble remembering that it does take some time, right? And we're trying to compare what's going on with us versus what those bigger guys are doing. And like you said, I think Dion's probably overall the has the youngest portfolio, right? He's only been doing it maybe 12 or 14 years,
Mm.
but still in 12 years, I'm sure we'll be in much better shape than we are today. And Zuber and Matt have been at it for 25 years at least. So it's no wonder they're successful.
Yeah, totally agree there. And I think the other person that I think we mentioned him earlier is Coach Carson, because he kind of has phases of his, you know, real estate adventure. So he, worked really hard for a few years, and then he took a sabbatical for a year, and then he came back and worked really hard for 5 years, and then took another sabbatical, and that's something, he's definitely at the point where he's got a ton of units now, but he likes to discuss you don't need to have 1,000 units. Was 50 enough where that's still cash flowing, a really good amount to make sure you can have enough to live off of and buying the right property. So you're dealing, with Class A or Class B properties instead. And so that's something that I've been following his stuff as well, because he gives you the unique perspective.
Yeah, I think, and two, what you were talking about there with Coach Carson being the small and mighty investor, and then Zuber trying to get us just to get to four. I think I think four could be amazing but I think you'd need to start that a little bit earlier in your journey to give
Mhm.
them time to build. And and with our portfolio being new, and what you got going on in 5 or 10 years, you'll have so many more options,
Yeah.
you know so that's exciting to think about.
Yeah, and I knew I wanted to kind of grow past four, but you think of bigger is always better, and so these people keep growing and growing and growing, and I don't think I'll ever be out of real estate investing because I actually really enjoy the process. But now I realize, like, okay, maybe I don't need to keep just going just to go. I can enjoy on the way, and then also, I don't know what our final door count will be, right? Is it going to be 30 or 50 or 100, or at some point, right? But I'm realizing now, like, I mean, not need to be that massive number that other people have talked about. So, it kind of find appreciate that a little bit more. Where, okay, I'm at a reasonable amount now, and then maybe as we keep going another 5 years, maybe I can double it, kind of, and then maybe that'll be enough, for what I need going forward.
Yeah, we've had that conversation before in our meetings too, where in the beginning, the uh, Dion might say, how much do you need to live on per month, and you come up with a number, and then if you're seeking, a couple $100 of positive cash flow per door. In our case, we needed 30 to satisfy how we're living today. But but then after a while, you think, well, in 5 years, the cash flow is going to be greater, so maybe then you don't need 30. Maybe you just need 20 or whatever it might be. So the longer you're in it, the better, obviously, things will be. But I think the message is just to get started, and I got restarted at 57, so I don't think it's too late. It's obviously not too late for us to have a better retirement. It's certainly, if anybody's, how old are you? I forgot to ask.
I'm 33.
Okay. Yeah, so for you and Mikey's a little older than you, but you still have easily that decade and or more to build a portfolio and retire, before we will. So yeah, I think just get started, but definitely do it the right way. Find the right people to be around and learn from. And I'm glad we found the group.
Yeah, definitely agree. One thing that always resonates with me from listening to Dion is, like, if Dion always said, if I had to be frugal, I wouldn't have started this process, and that makes a lot of sense to me. Where, like, I don't want to live on beans and rice my whole life. I want to go and enjoy things, and maybe it's not the fastest way to get there, right, to financial freedom, but try to enjoy it a little bit on the way, whether that's traveling, eating out, or whatever. In the meantime, obviously you got to make sure you're financially secure. Don't just go buy 3 boats or something like that. Um, but there's things like that. You can go out to dinner, or with your wife, or date night, or anything like that, just to make things a little bit better as you go along, and don't pinch all the pennies. So that's something that he kind of mentioned as well. And then, when you're retired, then you can actually do something. You're not, living on just the basics. So I think that's important too.
Yeah, and to be able to actually do stuff, right? You don't want to wait until you can't walk or you're using a walker or a wheelchair or things like that. So um, that was one of the other things that he and Zuber both expressed on the cruises that they went on, that the majority of the people couldn't leave the boat because they were in a wheelchair or, in using a walker. So that was pretty tough to hear.
Yeah, it's something I've been regularly thinking about. I'm like, I would love to take an Alaskan cruise, or something like that, or something that's always been on my mind is doing like an Antarctica cruise, or something like that, where kind of that one in a lifetime experience, and try to do it when you're young, so you can actually do the hikes and the exploring and all that kind of stuff. Where if you wait till you're 80, like you can't enjoy it the same way you can now.
Yeah. And that was another thing, they were talking about older people that they've talked to and were asking, if they had any regrets. And most of them were saying they wish they had stopped working sooner
Hmm.
because they could. And they just kept grinding. And then, one man's wife passed away and he could barely walk and stuff like that. So um, we got to get out there before that happens for sure.
Exactly.
All right. Well, thank you again for jumping on here with me. Hopefully, I'm sure folks will get a lot of good information out of what we talked about tonight. But if there is anyone that wanted to reach out to you, is there a place they could do that?
Yeah, probably the easiest thing is just my name at Facebook. So you can just reach out to me on Facebook if there's something that you wanted to discuss or question or anything like that. I'd be happy to, chat. Yeah, that'd probably be the best place. I don't have a, channel or anything like that. So feel free to reach out on Facebook.
Yeah. Okay. And two, I mean, we have the channel so people can comment in there and ask, any questions, and we can connect you guys with Cody if you'd like. And we'll look forward to seeing you in the other places this week. And we'll have to circle around next year and see how things are going for both of us. So thank you again for being on with me.
Absolutely. Anytime, Frank.